Because I think this is an opportunity for a lot of first-time home buyers that are struggling to get in the market if they really understand the power of or the velocity of money.
So okay, I'm glad you said that. If they have the skill set, because I've seen some people who are buying their principal or buying their first investment property off a wholesaler and they don't make money or they lose money, right? Hey everyone, welcome back to the Mark Loeffler Experience. We got Faizan and Babar from Canadian Homeowner Solutions and One Up Investments. And you guys are not going to want to miss this show. This is the best one I've ever done. We talk flipping. We talk about how they acquire the properties. We talk about their new venture, which is raising capital for other people. You guys don't want to miss this, and you definitely want to follow these guys on Instagram. So watch all the video and comment down below. What's up?
What's up?
Hi.
So boys, you guys got a lot going on.
Yeah, we have a few different types of projects going on right now, so it's definitely a busier and exciting time for us right now.
Yeah. So you guys, I met you guys first as flippers, right? Like that's
Yeah.
what you're doing. You're flipping, you were adding value. Did you hold some of them or you just sold all of them?
Yeah, so that's a good question. So we actually did hold some of them, and some of them were a result of just projects that we wanted to hold. Some of them ended up being projects that, because of the way the market was, because especially we met last year, right?
Yep.
Right around the time when the market started to drop a little bit. Some of them just happened to be a product of the market, and we ended up holding them. But fortunately, because we had kind of analyzed our properties beforehand, the ones that we did end up holding, they weren't cash flow negative or anything like that. We ended up refinancing them, pulling out majority of our capital, and just held them for the year, right? And we've been selling off some of them slowly throughout this year and the end of last. So yeah.
All right, so let's talk. So how long have you guys been flipping properties or investing in real estate?
I think collectively we've been investing in real estate since 2019.
Okay.
Actively. Prior to that, it was more passively because we didn't take any education, we didn't go through any mentorship programs. So since 2019, it seems like a lot has happened between then and now because the level of activity and us coming together, creating a business around real estate. I think that really feels like much longer than 2019.
Yeah, and you guys do this full time now.
So I do this full time.
And for me, I still have my 9 to 5, and it's almost like a complementary asset that I bring to real estate. Because in my 9 to 5, I'm in corporate sales.
Okay.
So I sell to executives. For me, it's about building relationships, negotiating, and really like solving pain points. So we're very complementary to what we do in real estate on a day-to-day basis.
So good thing we're filming this at 6 a.m. so you're not taking away from your corporate job, right? If they ever watch this.
That is correct.
Yeah.
I'm not on the job right now.
Yeah. All right. So you guys got together in 2019. Had you guys invested at all before you started working together?
So we actually got together in 2021.
Oh, okay.
Yeah. We were doing a few things here and there in real estate before. So we actually had our own projects going on when we first met. And I think that was kind of one of the ways that we got together because we were both kind of focusing on the Niagara region. And this was in 2021. Market was still hot. And we were like, hey, we know there's quite a bit of potential in the Niagara market. But, with the way the market is, we need to start generating our own off-market leads. So that was kind of the inception of this partnership where we were like, hey, we don't want to do it by ourselves. We're both busy with whatever we're doing on the side, but we can come together, pool our resources, start finding our own off-market leads. And that kind of led to us coming together.
So Faizan, what did you do before then? Like before you became full-time real estate investor?
Yeah, so I've been in sales all my life. I've done all kinds of different sales in a bunch of different industries, and I've just been in sales my whole life.
Two sales guys getting together. Who knew?
100%.
All right. So when did you go full-time into this?
I did it in 2021. So essentially, I was more of a client-facing role beforehand, and obviously the pandemic kind of wiped out a lot of my business. So when that happened, I was just looking for new ways to kind of move out of that space. And in 2021, I had a property with some equity built in. I ended up hiring a coach, and he kind of led me through the process. He guided me and educated me. and eventually I got started on flipping. And once I did that, I had a few projects on the go to the point where it was more cumbersome for me and less profitable for me to stay at my job than to focus on those projects.
So you became the GC.
I became the GC, 100%. Yeah.
Yeah. How do you like being a GC?
Honestly, it's one part that it's one of the most mind-boggling parts about real estate. Like just getting through to certain people, and being able to get on that level with them. But I love the GC aspect of the business. I love being able to go in knowing what to do, what makes the best ROI in terms of renovations, what we should focus on and not focus on, and how that interacts with the market in the present moment. So do we need to go all out? Do we need to do very minor renovation, paint and cleanup and whatever? I love that aspect of the business.
Nice.
Yeah.
All right, so let's talk deal. So 2019, you guys were apart. You guys weren't, what do you guys call yourselves again? What's your real estate investment company?
So we've got our off-market lead generation by the name of Canadian Homeowner Solutions.
Okay.
All right, and then we're also launching our another company called One Up Investment Group.
Okay.
All right, so stay tuned for that. But
Okay,
that's
so
going to be our.
Before your Canadian Homeownership Solutions, were you both flipping?
I was doing primarily BRRRRs, so like
Okay.
I was renovating, refinancing, and essentially keeping it on short-term rentals, as that's another avenue I discovered to as a strategy in Ontario, in markets where there's strong demand.
Yeah. All right, so you both started in 2019. How many deals did you do in 2019?
So I personally didn't start in 2019. I started in 2020, but I started more passively in 2020.
Okay, so so let's start 2019.
Yeah, so 2019 I did one deal, I did one BRRRR, and then I did.
So tell me about that first deal.
Yeah, so this was in the city of Port Colborne.
Okay.
Again, getting priced out from the primary markets in Niagara led me to Port Colborne. I bought the property for $500K.
Yeah.
It was a single-family house with an unfinished basement that I could create a legal duplex in. Spent about $120 in it in terms of renovations. City was great to deal with, and I refied for $950.
Wow. So do you still own that?
I do.
What's that worth today?
Probably not $950.
No.
Nowhere close, but I think right now in terms of returns that I'm getting from a short-term rental standpoint, it's a great asset to keep.
Yeah. So you short-term rental that, Airbnb, whatever. Yeah.
Yeah.
Okay. So Faison, what was your first deal then?
My first deal, honestly, was a pre-construction house, townhouse, Milton, cookie cutter. Obviously, those are the houses, they're the standard appreciation play, standard whatever you learn about real estate investing before, right?
Yeah.
If we want to talk about actual first project when I actually got into real estate, it was a flip I found in Welland. So this was 2021. I ended up finding it for around 315 or something, single family house, 2 bedrooms, 1 bathroom, and I got it through a wholesaler. And it was kind of just trying my luck there almost, with the coach guiding me. I never went to see that property, and I just saw pictures, and he was like, hey, the numbers look good. And I was like, I've never done a construction project before, but why not? Let's go for it.
And obviously you were still working full-time.
I was working full-time, and I went and saw that property, and I was shocked at what I just signed, but yeah.
It was a piece of shit?
It was more than a piece of shit, yeah.
Yeah. So was it, okay, so you bought it for $315?
Yeah.
What did you put into it?
I ended up putting about $100,000 into it.
Okay.
Yeah.
And what did you sold it, obviously?
I sold it, yeah.
What'd you sell it for?
$480.
So you didn't make much money on that?
I did not.
Like, you might have made 10 grand after everything's said and done.
That was I call my university degree in renovations and a real estate education, right? Because the amount of things I had to do in that project and some myself. I just learned off YouTube and whatever.
Honestly, if you didn't do it yourself, you probably would have lost 20 grand. Because
100%.
I'm shocked by what you just said, like the
Yeah.
condition and how cheap the rental was. But
Yeah.
my next question was, how much work did you do yourself? So you were burning the midnight hours there, right? Like you'd do work, you'd go
Yeah.
there, you'd paint, you do some
100%.
plumbing, like yeah.
100%. There were days I went in the morning and I was, driving back from Niagara to the GTA where I live at 1 a.m. in the morning or something. And you just had to do it.
Just thinking, why the hell am I doing this? And then you got the paycheck at the end, and you're like,
Why did I do this?
why did I? So you persevered, and you're still doing it.
Yeah, I mean, one of the things, I think one of the things that's beneficial to me being in real estate is I like to think I'm a go-getter. So while that project was going on, I ended up taking on 2 more flips because I was like, hey, this makes sense.
So where did you find the 2 other flips?
Wholesalers.
All right, but I just want to put it out there that
Yeah,
not every deal from a wholesaler is a good deal.
100%.
Like I get deals all the time from wholesalers, and I'm just sitting there. I'm like, yeah, it's okay. And if
Yeah.
I was a homeowner and I saved 10, 20 grand, great. But like if I'm going to flip the property, I need to buy that way less, right? Like I just that doesn't work. Like there's no margin of error. There's no profit in this. They're taking all the profit, right? Do you know what the
Yeah.
wholesaler made on that deal that you bought?
I do. So they made 15 grand.
So they
Which-
didn't make that much money.
No, which is also why, and it came through a good contact. So I was like, okay, you know what? He's not being unfair or unreasonable with his deal either, with his price.
Yeah. They just didn't negotiate that well on the buy.
I didn't, but
No, I mean they did.
oh, they yeah.
We've been on the other side of the fence when we've wholesaled a property for, and to your point, it's what we've negotiated and then we justify that,
Yeah.
right? And I think that's where we have to do due diligence on any wholesale deal based on the numbers, right?
Yeah. All right. So you're into flipping. When do you go full time into it? Before or after you started the partnership?
I think it was right around that time.
I didn't make him quit, just to be clear.
No, I think I left in September and we started in October. So yeah, it was right around that time.
So how's it been getting your own deal flow? Because that's like, you guys went 4 or 5 months into the hottest market ever.
Yeah.
And then it just went
Yeah.
right down the cliff.
It was a very interesting learning experience for us from a marketing standpoint as well, because we were firing on all cylinders. So from flyer campaigns to Google ads, Facebook ads, networking. I think that's one key aspect that we invest heavily in, is building relationships, boots on the ground, and really making sure that people know us. That is how we got deal flow coming to us, and essentially, that was our strategy to begin with, is to have that deal flow. If it makes sense to us, we'll flip it or keep it, or if it does not make sense to us, we'll wholesale it.
So where do you find most of your deal flow coming from now?
Right now, we have turned the taps off on marketing. I think a lot of it has been the built-in equity from the relationships that we've developed. Those are where we are finding the best opportunities that are coming to us.
Yeah. And that's just through other wholesalers or other investors or even other realtors.
Yeah, absolutely.
Everybody, yeah.
Everybody.
Yeah. Like we were talking before, like I have an off-market lead for a principal residence of mine that I might buy and then, I don't know, down the road flip. Because, I mean, in Canada, we had the principal residence is the best tax dodge ever, right?
100%.
So,
Well, I mean, to your point, even my principal residence, I bought through a wholesaler.
yeah.
Bought it off market, and just ran the numbers, make sure there's enough meat on the bone, do your due diligence, and really land on target from a renovation and a timeline standpoint. Because I think this is an opportunity for a lot of first-time home buyers that are struggling to get in the market. If they really understand the power of, or the velocity of money, and they have the skill set, and I think they can really get into the primary markets.
Okay, I'm glad you said that. If they have the skill set, because I've seen some people who are buying their principal or buying their first investment property off a wholesaler and they don't make money or they lose money, right? I mean, we have a gentleman in his office, and he bought off a wholesaler, and I'm like, man, you're overpaying. Like, you should just walk away from this deal. There's too many red flags.
Yeah.
It's too much crap, and went through with it, and he's not going to do very well. Like, he's going to lose money on that, right? Like, market didn't help him, and then the property was worse than imagined, right? Like, he couldn't see the property. I'm like, why would you buy it? Like, no, just stop and walk away. Just because it's from a wholesaler doesn't mean it's a good deal.
100%. You know, that's where marketing just pushes that idea in people's minds, where the actual analytics or the actual financials of a property go out the window. And it can apply to on market and off market, right? But people hear the buzzword off market and they're like, hey, this must be a ridiculously good deal. Realtors don't have this, etc.
I put out exclusive deals.
Yeah.
And people like email me all the time. And then it's like, oh, it's on the market for the exact same. Well, I don't want it.
Yeah.
I'm like, well, it was a good deal as an exclusive. Now it's not. Now I get it in multifamily.
Yeah.
Multifamily, they can be a lot more creative on off market with financing.
Yeah.
Whereas it's on market, it's public information. They can't be creative, if you know what I'm talking about.
Yeah.
What? So what do you guys got going on now? So you're, sorry, I forgot the name of the company. The One Up.
One Up, yeah.
One Up Investments, right?
That's right.
Is that like a play on like Super Mario Brothers, or is it like you're gonna one up someone, or what's up with that?
It's a question that we've been thinking about while we were, coming to this name. It really was a function of our thinking back then. Is that, the two of us have very complementary skill sets, and even though we both have sales background, we bring very different skill sets to the table. So, my strengths and weaknesses complement his strengths and weaknesses. So, we were talking, and we're like, hey, we can one up the competition in many ways, because we're not times two. We can really scale if we double down on our strengths. And I think that's what we've seen. The growth, the exponential growth we saw in the last year and a half was a result of that. So one up signifies that we're one up.
There you go. So okay, talk about exponential growth over the last year and a half. Like what does that look like?
It was essentially the last year and a half since the market started to cool off. We had a total of 4 projects on the go. One of them was a small multifamily. One of them was a 3-unit, like a triplex with a big garage and a deep lot. 2 of them, one of them was a flip, one of them was a renovate and refinance. So essentially, a bulk of our focus became into how do we bring on joint venture partners in all our deals. So the exponential growth was not just in terms of deal flow, but it was also in terms of the partners that we attracted.
Yeah.
And ones that we're taking forward from deal to deal now, right?
Yeah, and that's usually what happens. Like you pay someone out, and they're like, they get a profit. They're like, hey, I don't want my money back. Just what's the next deal, right?
It's magical.
Well, and while you're building relationships.
True.
Yeah. So, all right. Well, so you did those. You had the 4 multifamilies, but you're doing flips as well, right? So how many flips have you done in the last year?
In the last year, so we actually slowed down on the flips again when the market started to slow down, right? Since then, we've probably done maybe 3 or 4. And we started to focus more heavily on it this year again when we started to see the market started to pick up again.
So they stabilized.
Yeah, a little bit.
I think we're kind of stabilized now.
Yeah.
If you read some reports, we're in the biggest housing bubble still since whenever. Yeah.
And those reports have been coming out for years. And
years.
Yeah. They predict every next year.
What's the guy from BC there? Starts with a G. What's his name?
Who, the NDP guy?
No. He's a blogger. Or he used to have a blog, yeah. He's quoted in so much stuff, and anyways, the guy who predicts a recession, every year, right? And he's going to be right.
1 year.
Like sometime he's going to be right, and that's the thing, right? Like a broken clock is right twice a day.
Yeah. 100%.
Like he's going to be right at some point, and then that's when he gets all this publicity, and people follow him and do whatever. But yeah, you can't live like that. And I still fundamentally believe that in Ontario there is a shortage of housing.
Yeah.
And until they fix that, we won't have a housing crash.
Yeah.
Like a huge like I think there was a crash February 2022. Or like that was the peak.
Yeah.
And then we came down to, what was it, like December? We started to see a little come up, December, January. And then by June we'd recovered a little bit, but yeah, but I think we've been pretty stable. Like you're seeing prices fluctuate 0.5% a month, which is normal.
Yeah, and I mean, just going back to the flips, right? It was easier when the market was appreciating, and I think
it makes everyone look like a genius.
exactly, right?
If the market goes up 10% over the 3 months that you buy it,
it's so forgiving.
yeah,
right?
like you can not even do anything and make 10%. So if you buy a $400,000 property, you're making after everything $20,000.
Yeah.
Exactly.
Yeah.
Right now, the types of flip that we're doing is really more strategic, right? We're being extremely selective. In fact, it's not that we're finding flips in abundance. It's those gems that you find, and how it relates to our strategy is that you can still flip in a declining market if you buy right.
Oh yeah.
And that's the only way you can guarantee your returns. In terms of our business, like flipping is our active business. It's we won't do so many, but we'll do some good profitable ones in a year. For the now money, right? For the short term money.
Yeah.
It's a short and a long game.
Faison's got to eat, right?
100%. There you go.
He doesn't look like he misses many meals. Just saying. So yeah, I mean, you're strategic, right? You're strategic on your flips. Like you have a number, and you obviously have the margin of error in there.
Yeah.
Are you still doing burrs?
We are, 100%. But it's just in terms of the kind of burrs we're taking on, right? We're not taking so many single families or anything. Everything is a conversion from, let's say, single to try to 4 at least, or it's a try or 4 at least.
So it's funny because I've had this conversation with a lot of people lately, and they're like, "Oh, like what about buying a bungalow?" I'm like, "Yeah, you can do that."
Yeah.
But like the raw product of the bungalow is going to cost you $600, $650. You're going to put $150 to $200,000 into it, depending on the upstairs condition, and you're going to be worth $825 to $850 maybe at the end.
Yeah.
So you're dollar in, dollar out.
Yeah.
Which is fine if that's what you want to do, but you're not going to get, if you're looking for more than, say, 60% of all your money back, then you're not going to get it, right?
Yeah.
And the other big thing is you need to have, one of the biggest things that I think the downturn in the last year highlighted is you need to have staying power for any property through any situation. And I think even for us, when we look at properties and people are pushing out these perfect burrs and stuff like that, even if you look at it, is this perfect burr cash flowing or not?
Yeah.
Or is it at least, carrying itself? And we've seen those types of projects in the last little bit come up where everyone's like, perfect burr. But you analyze it and you're like, I'm losing $1,500, $1,000 on this property a month.
Yeah.
I don't care if it's a perfect burr.
I'm not going to hold it after. So.
Yeah.
So, okay, well, let me ask you this then. Are you guys seeing opportunity in just buying like a rundown fourplex and then just fixing it up already as is? Like you don't have to convert it?
Yeah, absolutely. We think that's one of the easiest, right? And we're actually going through a conversion process. Obviously, depending on municipality, some are easier than others. But the way the city is hammering us down with requirements over there right now, and they're just being picky about everything, right? So our focus going forward is going to be, if we can, less conversions and more as is.
So, like when I started, that's all we did. Like we never did a conversion because it was painful, right?
Yeah.
But we could buy a property. Like we didn't need permits. Like we weren't changing anything. We weren't changing plumbing. Maybe a little electrical. We get an electrical permit or something. But it was easy.
Yeah.
Like it was all cosmetic.
Yeah.
Like we didn't do anything structural. We didn't add units. We didn't do any of that. It was all just making it look nice and, obviously make it long lasting. But that's what it was. And then we would just put it in. We'd cosmetically renovate it, refinance it. This was before burr was a whole thing, by the way. This is we're talking like 2005 time frames here, right?
Nice,
nobody had ever talked about a burr back then, but that's what we were doing.
Yeah.
And like, I feel like that's more like the time now. We've sold a couple to investors lately, like good fourplexes in Hamilton, like great locations at sick prices.
Yeah.
Like that, yeah, they put $100,000 in, and that $100,000 will make them 300.
Nice.
Yeah. I mean, right now we're going through a 4-unit conversion. It was a single family home.
Yeah.
It was 2 semi-detached houses that, we have a finished basement on both sides. Legalizing those units and just going through the entire city process, I think that's been the biggest burden. But we know that,
You'll get rewarded for that. That's
Yeah.
a big enough jump.
Yeah.
And so, and this is what, like, obviously going through it is, what's the change of use that will cause it to then be a good burr, right? Like,
Yeah.
if you take agricultural land and turn it into residential land, if
Yeah.
you take, like, rezoning land, if you buy a property that has extra that you can cut off the end and make another lot, again, that's worth it, right? So you're changing the use enough that is going to cause you to be able to make a profit.
100%.
Yeah, going 1 to 4,
yeah.
it's going to cause you to be able to make a profit.
Right.
Well, and then also on the financing side, right? Like we want to be more towards the commercial financing, that allows us for, so we don't have to qualify for that mortgage
Yep.
as a residential. So that's number one, right? Because we have a partner on the qualification side, and then just the whole the way we're going to operate the 4 units as short-term rental, right? That's our play for cash flow.
Yeah. But it's funny you mentioned like government slowing you down on it when, like, obviously we need housing in Ontario. Obviously the provincial government has tried to put steps into place to fix these things. And every turn the municipalities just gum it up. Not in my backyard.
Yeah.
Nope, you can do that over there, but not here.
I think there's multiple factors there, but I think there's the government, but the government to a certain extent in certain places is a product of the people they're serving, right? And that's the
100%.
bigger problem, that we have a population that's not as educated as they should be, and they're turning around and hammering down on the politicians to stop that.
I mean, they're highly educated typically,
yes.
but they are like, that's great. You can build whatever you want, just don't do it here. But the
100%.
problem is when everybody says that,
Yeah.
and then they fight against it,
Yeah.
Yeah.
then that becomes an issue, right? Like,
Well, we're hoping that Bill 23 and the onset of similar initiatives that not just create a mandate, but also then start this trickle down effect to the municipalities, because people are inquiring, people are restructuring how they look at opportunities and deals based on Bill 23. So it's too hard to ignore, even if you don't accept it.
it's funny though. I forget who was on the show, and they were talking about Bill 23, and if they said if Bill 23 was in place right now, like this would be done. But we did it before Bill 23, so now we have to go through all this, whatever, and site plans and everything. Oh, it was Taco.
Yeah.
Taco, because he's
Yeah.
building out in Welland or St.
Yeah,
Catharines.
with St.
or something.
Catharines,
Yeah. I've heard St. Catharines is very difficult to deal
Oh,
with.
yeah, brutal city.
Tough,
It is,
Yeah.
Okay, you guys are flipping some. You're still doing some burrs, but you got this one up, right? One up investments, and basically, I know you guys are doing this. Is you guys are raising money for other investors to do their deals, right?
Yeah.
So when did that start? How's that going?
Yeah, so it was a function of I would say it was a snowball effect. When we were bringing on partners for our deals, we wanted to make sure that even if we don't have a deal for a potential investor, we look at other people's deals, and I want to caution what those other people's mean, right? Like it's somebody that we would invest ourselves, so it's a relationship that we have prior, our values align, essentially the deal itself checks out for us, so we do a lot of due diligence on that. So we're not going to just raise capital for anyone's deals. We have like maybe a handful of partners that we work with. How that is going, I think it's a mixed bag, right? Because times are changing and investor appetite is also evolving based on what they're seeing. in the markets, but also based on what they're consuming on social media, right? Because on social media, there's this shiny object syndrome of like flashing rates and, here's a higher return. And so when I get the questions about rates before even a question around the deal, I can tell a lot about, what type of investor I'm talking to.
Yeah. And obviously, what's Warren Buffett's number one rule?
It's not lose money.
Yeah, don't lose the capital, right?
Yeah.
Like maintain the capital. What's his number two rule?
Don't forget rule one.
Don't forget rule number one, right? So when these investors are going in, and they're like, oh, if I'm going to make 20%, well, great. Are you going to get your money back first?
Yeah.
Like, is this deal going to blow up so much that you're going to lose everything? Like, if that happens, where are you, right?
Yeah. I think one of the things that we, are in social media and all in general, and I think investors in general too, they don't make people aware of the bad situations. And I think that's why everyone only has the perception that things always go well. Yeah. We always have so many stories of, this person was so successful, they did this, they did that, but not enough stories of, okay, this went bad. This person didn't get this or that, and because of that, their project wasn't profitable, and all that. So I think that there needs to be a little bit more of that awareness, or at least equality in what you're posting, right?
Yeah.
And people will appreciate both things, but that should at least start to clear up that misinformation.
Yeah, like I have a deal going bad right now. We had a break in, like they stole all the copper, all the wiring, and everything. Yeah. And insurance isn't looking like it's going to cover it for whatever reason. And that was my phone call just right out there now. And like the contractor's like, this is going to be a lot more than you expect. I go, no, I know it's going to be expensive. Just tell me, rip the Band-Aid off. Just tell me. Yeah. But then it gets my mind thinking. I'm like, I just go back to the investors. I'll give them back their original investment because number one, it's going to be longer. I at least give them the option. It's going to be longer and probably not as profitable as they thought.
Yeah.
But I'm just going to say, okay, never mind. You should probably just have your money back and go do something else with it in the meantime. Because, again, you might not, the building's going to be good in the long term.
Yeah.
It's just a matter of it's going to take longer and not be as profitable because we have this added expense of having to now rewire and replumb the whole building.
Yeah. It's a good perspective of looking at it, right?
Yeah.
Because, you're in it for the long haul and you are going to get a few punches along the way.
Yeah. But again, so what I find, though, is that people, like a lot of investors I know, if they had to, they couldn't pay back the investors, right? They'd be in such, they don't even have enough deal flow on the side where that deal takes care of this bad deal, and it's but they just don't have enough of their own capital. They're out there raising money. They got 20 grand in the bank and they're out there raising $1 million.
I think
you guys can both comment on that if you want. It's fine.
Because we're actually going through that, right now where, one thing we always preach is that the jockey is more important than the horse, right?
Horse is actually pretty important.
It's still important, but you have to look at the operator, the credibility, the track record.
Yeah.
What else do they have going on besides the deal, right?
Yeah.
What else can be offered as a collateral, right? And how are you going to pivot if the plan does not go through? So what is your plan A, B, C? And just having a broader conversation around risk, right? I think that is really important when it comes to the capital raising, because then they not only just appreciate the opportunity, but also maybe that becomes their long-term relationship because they know others, and when they resonate with how you structured the deal, how you're hedging the risk, how are you going to pivot in case things go sideways, they've taken value from that.
Yep.
Yeah. I was gonna say, one thing that probably will keep that investor on is that transparency, right? You're giving them the option to make that decision.
Yeah.
But the other big thing is depending on the type of investors you have, we have that fourplex that's taken a lot longer than we had hoped. But as long as you're transparent, and then with some of the investors, they work their full-time job. And when we come out and we're like, hey, this is how it's going to affect your returns, well, they're like, okay, well, I'm still making something on my money. I don't really have to worry because these guys are straight up and they're telling me how it is. And on top of that, it's going to be too much work to pull out, go find something else, go put it into something else. I can keep my hands off. I can keep doing my job, and I know that eventually I will get my money back, and the project will pay off, and this and that. So I think there's a little bit of that as well, right?
Yeah.
So transparency is a huge thing.
Huge, yeah. It's massive, right? So how many projects have you raised money for so far with the new company? Or are you just doing the first one now?
You mean for other people or for
other
ourselves?
people?
For other people, this is our first.
Yeah. So let's talk about that deal a little bit, okay? Because I think it's a pretty interesting deal, anyways.
Yeah.
So how did it get brought to you?
So this was a conversation over the last couple of months that we've been having with our partner. We knew that she was working in the New Brunswick market. We knew the type of deals that she has brought to us in the past. So we have spoken about potential collaboration. So when this deal came to us, we already had a lot of due diligence done on the partner themselves.
Yeah.
So we went straight into how do we best structure the deal. So this is a deal in downtown St. John. There's a partner.
New Brunswick, not
yeah.
Fanland. Yeah.
No, exactly.
Yeah.
The partner that we have boots on the ground already manages a few properties in that area. And that individual had the relationship with the seller of the building, which is owned by the church.
Yep.
So the negotiations were happening directly with the bishop. And, so there was exclusivity with the seller there, so we had a really good off-market purchase price on it. The condition from the seller was that this building has to be converted into a 25-unit senior assisted care.
At least 25. If you can get more, you can get more.
If you can get more, you can get more. But that's how, the city plans were developed. So there was a lot of due diligence that was done even before we started raising capital. Because, for us...
There should be.
Like, for us, we need to make sure that all these pieces are in place. Because these are some major pieces that have to fall in line. So, we have the seller exclusivity. We then have the 25 units.
Yeah, it's a restrictive covenant, really.
Exactly, right? The 25 units were approved by the city, so we have permits in place. Then we partnered with a large construction company. So that was another piece, is that we didn't want to go to a private mom and pop type contractor.
No, yeah.
The risk is way too much for something like this. So partner with a large GC.
And they can give you like a fixed contract for it because they know, right? Building, okay, here's the hole, here's the concrete, here's the frame, here's everything, away we go.
Exactly. And then it's not just the price, it's also like, if you look at terms and conditions, right? There's a lot of contingencies built in that. So we can confidently go tell our investors how, confident we are on this price, because we submitted that quote as part of our construction loan for our financing, and that is also approved and in place. So with all these pieces together, we are talking about the real estate piece. What about the senior assisted care? That another is a partner from the hospital right across. That lady runs many senior care facilities in the area. So that individual has a wait list of about 150 senior citizens that need care, but they don't have housing in that area. So it's a win-win, so that partner is on board. We're going to get a cut of that business. We're going to get the rent from the people residing there. And the plan is to refinance on MLI Select based on the affordability, accessibility, as well as energy efficiency. This is considered a new build, so the appraised value is going to be based on the cost.
Yep.
The cost value.
You get 95% of your cost.
We're going to get 91% of our cost.
It's funny though. I just had MLI Select come back on something, and I got 91%.
Yeah.
Like that's just weird that
Maybe
it's
that's
both 91%. Yeah. Like not 95 anymore. Here's 91. Like let's go.
Did you get 40 or 50?
I have 50. Well, I got to. It's the one I was telling you about. I got to get the engineer in there to say the life.
Okay.
Yeah. But 40, you have to have less affordable units, right?
Yes.
So maybe I'll do that. I don't know. We'll see.
Yeah.
Well, any parting words for everyone before we sign off?
No, I think if we haven't connected yet, we'd love to connect. Feel free to follow us on social media. We try to be everywhere.
We will tag your Instagrams.
Beautiful.
Wow, guys, that was amazing. Thank you so much for coming. You guys definitely want to follow these guys on Instagram. They put out a lot of great content, and you want to come meet them at our meetup, which we're starting again the third week in September. You guys come, hang out, learn from us.